Hello, my friends. Thank you once again for listening to me, watching me, and I hope that you continue to share the videos and you make sure that you subscribe to my videos. My name is Joseph Areu, and I am very pleased to be your host once again. Ladies and gentlemen, I would like to share some insights with you regarding investment in US dollar unit trusts. Well, generally foreign currency or so-called hard currency, but in particular US dollar unit trusts in my region, but I think generally across the continent you will find some unit trust products which put your money in US dollar denominated assets. So what are the issues that you might want to think about? What are some of the insights? So firstly, we would like to think about why. Remember, in some of my earlier videos, I talked about the importance of always understanding the why before the how. Why would you invest in a US dollar unit trust? The main reason would be the objective that I described as long-term safety. You know, you have some of these currencies, the US dollar is one of them, which are called safe haven currencies. So we live in rather turbulent times. Inflation has been hitting the roof. It's stabilizing a bit right now, but there's a lot of volatility. There's a lot of uncertainty. So there is always a risk of inflation going up and therefore eroding the value of your money. And so investing in a hard currency, a so-called safe haven currency like the United States dollar, is one of those ways that investors use or take advantage of to protect themselves from the risk of erosion of the value of their money as the result of inflation. So that would be a major reason to protect yourself from, if you like, currency inflation, depreciation of your local currency. So in our continent, many currencies have been coming under a lot of depreciation pressures. The Kenya shilling comes to my mind. The South African rand comes to my mind. The Nigerian naira comes to my mind. Even the CD at some point has been coming face to face with a lot of depreciation pressures and other currencies. And so, in addition to investing your money in your local currencies, you might be well advised to diversify when the opportunity avails itself into some USD or hard currency or safe haven assets, just to protect yourself from that risk of devaluation. Okay. Now, when you invest in a USD denominated unit trust, what kind of returns would you expect? Well, of course, that would vary from market to market. But the basic thing I would like to tell you is that when evaluating the return you're getting, you are not necessarily, or you shouldn't be comparing it to the rate that you would get in the local currency. So in Uganda, in Kenya right now, local currency unit trust would probably yield something in the order of 12-13% or so. Now, don't expect that kind of return from your US dollar investment. Please, that would be a dream which would leave you disappointed. You'd want to compare the returns that you get with the US dollar market, and that is, look at the inflation in the United States, for example. What is it? It's 3, maybe 4% or thereabouts. You want to be sure that you're getting a rate above that. Look at the treasury rates. So US bonds, US bills, roughly what are they paying you? They're probably paying you somewhere in the region of, again, 4 to 5% right now. So if your provider, if your fund manager is giving you something like 5%, 6%, well, you're basically doing okay. In addition, considering the fact that your main objective was simply to be safe, to play safe, to have a currency which has a very low level of volatility. In other words, the risk of depreciation is fairly controlled. So those are some items to think about, some insights that you want to be aware of when you are investing in US dollar unit trusts. Thank you very much, and do remember to share the videos and to subscribe. I look forward to talking to you again.